will simply set our entry and stop. You don't need to put below swing low, just put it here, and we will target 1:2 simply. Alright, now let's see what happened. Price failed our order straight to the target, so we made 2R. Alright, now let me show you some another examples. So you stop above target 2R. Alright, pure mechanical strategy. Failed and straight 2R. And don't be greedy, just simply timely book your profits at 2R. Do not think to you need. Hi everyone, I'm Harsh, and today in this video I'm gonna teach you a simple trading strategy which you can use and make a lot of money. And for this strategy you don't need any kind of market knowledge. It is very simple mechanical strategy, rule based strategy which you can use day in and day out. So the strategy name is previous day high, previous day low liquidity strategy, and for this you don't need any kind of daily bias knowledge where market is heading and where market is falling. It is simply rule based. So let's start. In this, what we will do, we have two type of liquidity. First understand, we have two type of liquidity. One is time based liquidity and another one is session based liquidity and swing highs lows liquidity on market structure. But we don't need market structure liquidity. We will use time based liquidity which happen daily, every day. So the strategy is simple. When price break previous day low, we will look for buy, and when price break previous day high, we will look for sell, because our goal is to capture a reaction from market, not to predict the market. Okay, we will just take our piece of move and then we will book our target, and we will simply book 1:2 on every trade. So risk reward is mechanical, strategy is mechanical. You don't need to use any kind of brain in this. So the goal is to capture a reaction, and then market will fall or rise, it does not matter, because we took our piece of move and we are out from the market. So let's understand the strategy in theory first very clearly. So here is price broke previous day low. PDL means previous day low. When price break previous day low on daily chart, so we will use 1 day chart for this. When price break previous day low, then we will go to lower time frame on 5-minute chart, and then we will look for displacement on upside, and then we will look for buy. When price will break previous day high, we will look for displacement on downside, and then we will look for sell. So this is the very simple strategy, and this is our entry model. So this is previous day low line. So what happened here, when price broke, we look for displacement and we took our trade, and our target is 1:2. This is previous day high liquidity. Price broke it, we look for displacement on the downside, and then we took our short position. If the displacement is not happening, we will not take trade. If the break happened like without displacement but it is a break, so we will not take a trade. We need proper displacement. So if you don't know what is displacement is simply when price move with speed and left fair value gaps. This show momentum and speed, and we need momentum. That's why we will use displacement, and we will set our entry on fair value gap, and we will place our trade and set our stop at swing low, at swing high, and we will simply target 1:2. Okay, so this is the theory, and I will show you the examples on the chart so you will get the complete clarity. This is, guys, very simple strategy, and this can make you literally funded trader, and you can use on multiple pairs, because not every day price breaks on a single asset previous day high, previous day low. So maximum 3 pairs are enough, and you can use this strategy. So let me show you example, then you will practice and backtest the strategy and find the accuracy of it. So I hope you understand the strategy on the theory first. Now let me show you some practical examples. So guys, this is the example number 1. Here we have our NAS 100 chart, aka Nasdaq. So in this is our previous day high, this is our previous day low, and this is inside bar. You can also use this inside bar, it does not matter, but avoid inside bars, they are low probability. So this is our previous day high, this is our previous day low. So what happened here, Nasdaq goes below, on the previous day low. Then we will shift to 5-minute chart straight. Okay, so here it goes below the previous day low first time, so we will look for shift. Here we do not have any kind of shift. For shift we need bullish candle. This is not a shift. Okay, so here we have first shift. Now see, I told you we need displacement, but it is not a displacement, it is an indirect break with slow momentum. We don't take these kind of setups because they are low probability. And what happened later? Price fell below. Now we will look for shift. For shift, either you can use these arrows. This is fractal indicator which you can use by this fractal nephew Sam. It will show you the displacement of market structure simply. Then NAS is below. We avoided this. Why? Because it is not displacement. Now we will look for displacement. So here price broke the structure. All right, now see, in this we have displacement, lot of displacement. Price left FVG, this is displacement. Now what we will do, we will simply set our entry and stop. You don't need to put below swing low, just put it here, and we will target 1:2 simply. All right, now let's see what happened. Price filled our order straight to the target, so we made 2R. All right, now let me show you some another examples so you will get the complete clarity. So guys, here we have another example. In this, Nasdaq broke previous day high, and when this happened on daily chart, we switch to 5-minute to see the displacement. As of now our fractal is here, so we know below this price will make a shift, and we don't need normal shift, we need a proper displacement. So let's see. So you can see in this price made proper displacement. Now what you can do, set your entry, stop above, target 2R. Alright, pure mechanical strategy. Failed, and straight 2R. And don't be greedy, just simply timely book your profits at 2R. Do not think you need 3R and so on and so forth. It is pure rule based. Okay, let me show you some another examples so you'll get the more clarity. So guys, here we have example number 3. Here NAS 100 broke previous day high, then we switch to 5-minute, waiting for our displacement. Here is the liquidity sweep, and here is our displacement. Alright, this is our displacement. So the only question you need to ask, did it left any FVG opened? Yes, it has FVG. You can set your entry, stop. You don't need to put above swing high, just this much is enough, and then you will wait for 2R target, straight mechanical rule. Alright, so order filled. Let's wait. Alright, so here another TP hit. So we made so far 6R. Guys, you can use this on multiple assets. Remember, the only rule you need in this, no displacement, no trade. What is displacement? Displacement is simply a market structure shift with a fair value gap. So here we have the fair value gap, here we have the fair value gap. If you have two fair value gap, use the first one. Alright, so this is the easy mechanical strategy you can use on any pair like gold, Forex, any pair. It works best on sideways market, and yep, it is very amazing. So back test it and forward test it and check yourself the accuracy. It is very powerful strategy on time based liquidity, and for that I already told you, you don't need any kind of knowledge about market structure and liquidity and so many complex things. You can literally make money with the simple strategy if you have the discipline. Alright, so if you like the video, please subscribe my channel and leave a comment, and it motivates me to make more videos, and you can also suggest me on which topic you want the next video. Thank you for watching, guys.